Hello and welcome to the Stock Planner channel. Yesterday, the inflation numbers came out, and I believe today there could be another inflation number come out. But basically, the CPI rose up to 54%, 5.4%. This was unexpected. Inflation is running hot. Is it transitory? Higher than expected? Expected about 4.5, and it was 5.4. So let's think about this. Is inflation here to stay? And I believe it is, and I believe it'll even heat up higher in October and November. So with that in mind, I would like to look at some companies that maybe have some staying power in inflationary trends. Companies that have sound books and are undervalued. And I don't want to look at today, I don't want to look at companies that are expensive. I want to look at some cheaper companies based on the fact that I think smaller companies their price will not be changing as much as larger companies. I'm looking for small, stable companies is basically what I'm doing. After hearing those numbers, the stock market dropped a bit, not drastic, but a bit. And all three indexes were down yesterday. Amazon, Telcel, all those were down. Microsoft, Apple, and Google seem to have turned a little green. Visa, some of the banking stocks went down, but we have the banks will be reporting today, and that should change things. So going over to simply Wall Street, I'm looking for small, profitable, undervalued companies that have been around for a while. And there they are. And the object is to pick stocks that have a lot of green in it. These stocks are going to have a lot of staying power if we have inflation. Verizon. These are all names that I have on my watch list. Beautiful. All the stocks that I have and do option spreads on and buy small amounts of shares because they're all very expensive. So if you have a small account, you can't buy 100 shares of Microsoft or even 100 shares of IBM without eating the whole account. If you have a $5,000 you're investing about $1,000 every trade, you can only buy 10 shares of IBM. So I'd like to see if there's any companies on this list of established, profitable, undervalued that are in the range of about $7, $10, up to $30. So let's change the filter a little bit. Let's leave the same conditions. I'm going to take the share price, move this up to around 7, and this down to 30. And actually, I want to move this up a little further, 15 to 29, and see what we get. Rocket companies, there's a lot of news out there. HPQ, like it. PPL, which is in utilities, a banking company. Regions Financial, which is very, very interesting bank. Norton LifeLock, China Bank, China stock, Investco, and Medical. I want to take a look at Investco today because I do think the financials will do well in the inflationary period that we might have or in a recession. Their mutual funds and ETFs will not go away. Now, the people that invest in them might have a little trouble during those times, but this company is not going away. So I'll investigate a little further. One of the problems with the cheaper stocks is there's not a lot of analysts that follow it. And we want to hear what they have to say, even though a lot of times they're wrong. But basically they're saying that the health of this company is very strong. It provides a dividend. It's good valuation. Future looks pretty bright for it, but perhaps it won't grow as fast as some other companies. And it has a decent past history. It's trading at 58% below the estimate of fair value. That's pretty cool. It's estimated to grow at 20% per year. That's pretty cool too. And provides a dividend. So if you get and own this stock for the year, you'll get 2.3%. Not going to cover inflation, but it's getting you there. And this firm allows individual retail clients to invest in their mutual funds and their ETFs, various other portfolio investments. And it works with commercial clients as well. Everybody heard of the Investco ETFs. They do stocks, interest tracking ETFs, commodities. They're a very old and established company, founded in 1935. I didn't know this, based in Atlanta, Georgia. Stock price looks like it's been going up, and then lately, the last couple of weeks, it's been coming down. It's not very volatile. It's a pretty boring stock. 1 year return looks good. This is a news article about 2 months ago about the insider selling the stock. That's not so hot. according to Simply Wall Street, it should be trading at, or valued at, the price should be $64. It's at 26. And the PEG ratio is very good. Good value on the PEG. It should be around 1. It's good. There's your future growth and your earnings and revenue growing. The company is doing good based on the industry. On your earnings, that's great. And the revenue is not growing so fast, but neither is the industry. So we learned a little bit about the company, its fundamentals. It's profitable, undervalued, but we're swing traders, and we need to know if this stock is a swing trading stock. Let's look a little further at the chart. Well, this does not swing it. It swings a little. I guess you could call that as minor swings, but generally that's not a swing, that's a trend. Then you have a pullback, and now the zigzag doesn't know what it's doing, so it might be going up. So we think of support and resistance. Resistance is about right there, about 29.50. And if we consider this as support, looks like that's about 25. Currently trading at 26.50. The last time it traded at 25 was in April. Is the stock going up here or down here? Zigzag says it's going, it doesn't know what it's doing, so, but it seems it knew what it was doing here, going down, and now it doesn't know, so it means it must be thinking it's going to go up. Our other indicators, the MACD, says it's going up. The stochastics is in the overbought. Will it come back around? And the RSI is already pointing down, but so these two indicators don't know what they're doing either. They're not saying and shouting out buy. We had the CPI numbers. We have the banking stocks this week. They should be good. So what I'm thinking is, for the next month, and I don't know what this stock is going to do. I don't think it has a lot of momentum up, and I don't think it has a lot of momentum down. So I think it's going to hang in this area. It's going to hang in between 25 and 29. Let me ask you a question. If I told you today that you could buy that stock in 3 weeks for $25, would you do it? And if I told you I'd give you $25 to wait those 3 weeks, would you take it? 3 weeks, you got to wait to buy it at 25, and I'll pay you $25 to do it. But I need to see the money first. I need you to see at least $300, $400. I need to see $400. You got to put $400 on hold so that I know you have the cash. And then in 3 weeks, you're going to buy it. I'll sell to you for $25. And I'll pay you $25 to wait. Would you do that trade? Let's see if we can go ahead and do something similar to that. Let's see if we can buy this stock at $25. Over on Option Strat, there's a free simulator. And I'm taking the stock symbol, waiting about 3 or 4 weeks, August 20th. That's the closest one. There is selling a put between $45 and $35. So that's even better. You can buy it in 3 to 4 weeks at $24, and I'll pay you $45 to do it. Sweet. Just gotta wait. Buy it at $24, and you wait $44. But if I may not it's my choice to sell it to you in 3 weeks. So if the stock is trading at 25, I'm not going to sell it. That'd be stupid for me to do that. So, but you can go ahead and keep the $45. You can keep it for waiting. Sounds pretty cool. This max loss is based on the fact that you might have to buy the stock. It's a $26 stock, so you need to buy 100 shares of it. So you need $2,600 in your bank account at this time. Now your broker will let you. It won't require that much margin. My broker's going to require about $500. But at the time this expires on August 20th, you may be required to take it, and then at that time you must have cash. And a lot of times the broker will give you a day so to sell it, but you must be ready to take possession at 20 cents. That's that max loss, and it's this number times 100 shares minus this number. Now, what I've done here with this strategy is also sold a call spread, a bear call spread at 29. In other words, I said it wouldn't get past 29. Remember? So I want to try to pick up a few extra bucks by selling this spread, and that's what I did. Sold an extra spread for some extra cash, 45 plus 25. So that gives me $65. Gotta wait a month, and this is my profit. As long as it stays in here, by the end of the 20th, I'll get my 65 bucks. If the stock price is down in the 20s, 22, I have to buy it at 24, and I lost 2 bucks. But remember, I was happy to buy it at 24. Let's take a look at that one more time. Well, under that scenario with some options, I'm required to buy it at 24, which I'm happy to do. I'm hoping it don't rise past 29, and if as long as it stays in here, I get to keep $65 or a little more. But required by the broker to put up $300 to $500 on hold to do this trade. And you're tying your money up. You're tying this money up for about a month. That's pretty good return on your $500. So the moral of this story is a swing trader tries to capture these swings, and then you can buy stock. In this case, with $1,000, you could have bought 40 shares of stock. In other words, you have $5,000 to swing trade with a $5,000 margin count. That's $10,000 to play. You don't want to invest it all, so you're investing $1,000 at a time, and for each trade, and so that $1,000 will buy you 40 bucks, and then you wait for it to rise. That's what swing traders do. They buy and sell the peaks and valleys, and you can do that in many different ways. You can buy the actual stock, or you can use some options to do it. This is just one way of using the options, and this is a way where I think Investco is a slower, more boring stock, and I'm not sure it's going to move that much this month. But $65 is $65, and I think it's a safe stock. I believe the fact that it's undervalued, where Simply Wall Street is predicting that it should be trading at $64, and I think people will eventually find that out. But it's trading at 26. I believe this stock will steadily increase, but at a slow rate, based on the conditions of the inflationary numbers and the downward pressure that will bring. So I guess what I'm saying is that I believe Investco will get here, but I believe that we have some downward pressure coming based on inflation. So I think to get from here to there, it's going to be a slow move. So I'm happy to buy the stock down here at 24, and I don't think it's going to get past 29. What do you think? For the next month, will Investco end up between 24 and 29? If so, if you think that, why don't you put $65 in your pocket? That's what I'm going to do. $65 is $65 for a slow-moving stock. You know, swing trading is mostly technical, about 75%. But you need to know a little bit about the fundamentals of a stock, what you're trading, you see how it fits in your picture, big picture of your portfolio. You need to look at some value, whether the stock is trading under its fair market value. You need to have a big picture, even though you're primarily using the technicals to do swing trading. We looked at Investco. I think generally it's going to go up, but slowly. And I looked at a strategy on how I want to play it for the next month. But don't listen to this guy. He probably doesn't know what he's doing anyway. But you probably know more about things in your own investments than he does. Do your own due diligence. Do your own analysis. Make your own decisions. You're responsible for them anyway. Don't listen to this guy, but you can learn from him. And you can learn how to do all these aspects. The important thing is you need to learn how to trade. You don't have to be an expert in any one of these fields. But you need to just go out and do it. Let's do some trades today. Happy trading. Catch you on the flip.